Hi, everybody. Welcome back to the E3 podcast. I'm Melissa Johnson, and today we have Eric and Neal on. She is going to talk to us about some really great financial type information for your business. So welcome, Erica. Thank you for coming on.
Thanks, Melissa. Thanks for having me.
Yeah. So tell us a little bit about you and what you're doing and kind of how you got into the financial world.
Yeah. So the financial, I guess, targets that I have kind of vary in a couple of different ways. But it really actually stems from my origination into the finance industry. I started at one of the big box firms, like right out of college. We had the downtown office and the big high-rise building, and that's when I was, super cool and knew everything. So I went and worked for this large investment firm, and it was great. I learned a lot from them and made some good friends and all of that. But when it came to the actual financial part and dealing with people's finances and helping people use their own money that they had worked on, they were working for it and working to save it for decades, really. And when it really came to helping people say, okay, well, now I'm done working for my money, I want my money to work for me. Mm-hmm. There were major pitfalls. And it was, like this massive gap. Even me as an advisor, I didn't really know how to teach people how to take all their money and generate cash flow. So there was a real big disconnect there. Just people running out of money every day on a regular basis. We were just closing people's accounts out because they would just run out of money. Wow. It was really painful. And I'm like, okay, this isn't really where I feel like I can thrive and be happy and have this, feeling of doing something and actually helping people. So I did end up leaving and went to an independent firm in Fort Worth. And so independent just means that we're on our own and we have the ability to partner with multiple companies instead of just being with one. Like if you go to an Edward Jones guy, you're going to get Edward Jones. Just like if you go to an Allstate person, you're going to get Allstate. And that doesn't mean it's good or bad, but that's just what they have available. So being an independent meant that we actually could partner with multiple Fortune 500 companies and help people pick and choose different companies, different products. And we actually started to transition my thought process from, building up and accumulating to actually helping people generate cash flow. Mm-hmm. I actually got introduced to the infinite banking concept. My husband and I were looking at doing some single family rentals and building that up. Well, throughout that time there where I was at this independent firm, there was another person there. So my now business partner, David White, was also at this firm, kind of doing a lot of the same thing. He came from the traditional stockbroker background and saw the pitfalls there. He, a lot of the similar stories on that. Well, he knew that I was doing infinite banking and real estate within my own personal life, and he was doing the same thing. And so whenever he was like, hey, I kind of found out about this multifamily thing and I'm working with a couple of people, and it kind of came full circle where we decided to branch off independent firm and actually launch our own firm that is specific to working with business owners and entrepreneurs and helping them understand the infinite banking concept. How does it help people generate cash flow? How does it help fund real estate deals, fund their business? You can manage expenses, all of these different pieces. It's called the and asset, really. And it's just figuring out how do we take all the cash flow that we're, building up and working on and create streamlined, efficient systems. And that's what we have been doing for several years now and built out infinity investment strategies. So in addition to the infinite banking, he and I, we are also doing real estate portfolios. Like we have our own personal real estate stuff that we do. We've had some single family development. He's got an Airbnb. My husband and I are looking at buying a couple of those, as well as passively investing in multifamily. But we are actively right now looking for deals in Tampa and Charlotte so that we have alternative investments for our clients to be able to invest in. So multifamily deals in either of those areas. So it's kind of come full circle where it's like, hey, we love real estate and we do finance. So it's kind of created this hub for people to be able to take advantage of both.
That's so cool. Like that's really seeing a need and filling it for people creatively, I think. So can you kind of explain like what the infinite banking concept is, just for people that might not understand what that means?
Yeah, I've had a lot of people say, "Oh, I think I've kind of heard of that," or velocity banking, bank on yourself, be your own banker, right? It's the similar verbiage that people are using, but really, infinite banking is just where we're taking a specially designed cash value life insurance policy and we're using it up to the IRS code and taking advantage of this type of asset, how it's treated, the type of liquidity and protection that it provides, as well as the tax benefits, and we're just plugging it into the rest of our portfolio. So, for example, one of the visuals we talk about is, if you have your money in a bank account, right? You have your money safe and it's liquid, but you don't really get any growth. Well, on the flip side, if you have your money in investments, and it could be an IRA, it could be real estate, it could be your business, whatever, the idea is for it to grow, but it's not usually immediately liquid when it's in an investment, right? It's tied up.
Mhm.
So we have this dynamic of, well, if you want safety and liquidity, you have to sacrifice growth. But if you want growth, you have to sacrifice safety and liquidity. And a lot of times people who are waiting for the next deal or waiting for the opportunity get frustrated because their money is just collecting cobwebs, right?
Yeah.
So infinite banking fits smack dab in the middle of those two, right? Because it gives us guaranteed growth, much more than what we're getting in the bank. It's completely safe. It's the only uncorrelated asset. So regardless of what the stock market does, it goes up in value. It is tax-free. It's protected from creditors and predators. So safe, guaranteed. Oh, and it's liquid, right? So whatever cash you have available, you can access it immediately. So it really becomes what they call a warehouse of wealth, where you just keep your liquid cash ready to go. Now, whenever you have an investment, right? So you have a multifamily deal come up, or you want to buy a house or land or whatever. If I've had people who say, "Hey, for my business, I need another box truck." Great. So you can take the money out of your policy and use it to fund your deal. Most entrepreneurs are going to want to use the loaning strategy. And here's why. You create arbitrage, which is what banks are doing anyway, right? So, for example, Melissa, you go to your bank and deposit money, they're going to pay you 0.02% and then loan it else to somebody at 6, right?
Right.
Well, if you're your own banker, you can borrow against your cash value, loan it out to yourself, right? To go invest in XYZ, whatever, it doesn't matter. Go buy Bitcoin, who cares? Whatever you want to do. It's your money. So what happens is, though, let's say you have 100 grand in your cash value and you take out, I don't know, 70 to invest in whatever. Well, most accounts, you're only earning interest on the 30,000 that's left over. Well, when you're becoming your own banker, you're actually earning interest on the full 100,000, even though you've borrowed 70 against it to go out and invest.
Oh, that's interesting.
So you're creating, right? It's very interesting.
Yeah.
So that's where a lot of people, again, business and real estate people are like, oh, well, I can go out and earn a rate of return in this investment while I continue to earn interest inside of my account. Okay, because that's what we're going to do as a bank, right? We're going to borrow a little bit, borrow at a smaller rate, and then go around turn and earn a lot more. And of course, the arbitrage is great. Obviously, a lot of people are interested in that. It's got the tax-free growth and all of these other benefits to it. But at the end of the day, I think all of us get to a point where we're tired of working so hard and we just want to kick back and relax. So we're all, we're trying to build up our assets to be able to generate multiple sources of cash flow, right? And again, that could be business, real estate, whatever. Well, your infinite banking policy is building up cash consistently for however long. Well, whenever you get to a point where you're saying, "Hey, I no longer want to put money into this thing. I just want to sit back and collect cash flow from all my different assets." This turns into a guaranteed stream of income, tax-free for the rest of your life. So you've virtually created your own personal pension.
Oh, wow.
And at the end of the day, so you have while you're working, while you're retired, and then at some point, we all know we're going to pass away. Right? That's just kind of the fact of the matter. So whenever you actually pass away, everything that you leave behind gets passed to the next generation completely tax-free. There's no estate tax, no inheritance tax, no wills, no probate, nothing. So it's a direct transfer of wealth from one generation to the next. And so that's why a lot of, most of the prominent, affluent people, families out there, they use this because they don't want to have their wealth and all the hard work that they've worked on to get eaten alive by estate and inheritance tax. Because at the end of the day, It could be 10, 20, 30 years, 40 years, who knows, until we pass away. Do we know what estate taxes are going to be, or inheritance, or anything?
Exactly. No,
Yeah.
that's really cool. So, with the initial like investment in that, are people, is it just through an insurance policy, or is it cash also? Like, can you just dump anything into this thing, or
So
and
it
then what
is
kind of
very,
policy? Is it like a whole life policy kind of thing?
mhm. They're very specially designed in that we do use whole life specifically in the infinite, in an actual infinite banking um, scenario, right? So my business partner and I, we are authorized infinite banking practitioners. We've gone through the course, we've gotten the certification, all of those things. And we only use mutually owned A-rated companies that issue the whole life policies, and they have to be dividend paying. I say all of that because when we talk about the guaranteed growth, the protection, and all of that, we don't find that within the universal life. So there's people who try to use indexed or variable universal life. There's no such thing as a good tool or a bad tool, right? That's not a real thing. But if you try to cut a piece of wood in half with a hammer, it's not going to turn out very good, right? Oh, drop my head. So when we talk about, using whole life specifically, it's the only one that has all of those characteristics, especially if we're using it as a bank, we want our bank to be guaranteed. I don't want to wake up and have to guess what's in my bank account depending on what the market did the day before. That's
Right.
not what it's for. My investments do that, not my bank. So we're using it up to the IRS code. So to your question, can you put whatever you want to in it? Kind of, right? The IRS, people used to, right? They'd put like hundreds and hundreds of thousands of dollars. Well, Uncle Sam caught wind of it, and they're like, we're missing out on a piece of the pie. So there are limits within the IRS code. It's not really much that our clients have to worry about. My partner and I, what we do is we structure these things to be super cash heavy all the way up to the IRS limit. And that's what we're going to use cash wise. So to your question, can you put cash into this? Absolutely. And so what we're going to actually show people is how do you structure your savings so that you can have the most cash up front and have consistent long-term growth on the back end as well, right? Because we don't want to have upfront and none in the back and then vice versa. I will say too often, and again, this isn't to be negative Nancy, there's no such thing as a bad tool, but if you go down the street and you talk to your State Farm agent about trying to do this, right, they're gonna set up a policy that doesn't break even until like year 11 or 12.
Oh, wow. Yeah, that's huge.
Yeah, and I've had multiple people say, oh, I had this policy, but I really didn't. I'm like, well, I mean, again, you were using a hammer to cut a piece of wood in half. That's a tool that's completely used for something else. Infinite banking policies, we have to structure them correctly so that we can get the cash up front so that we can use it to go do real estate or whatever it may be. So we are activating, or we are looking at whatever the IRS codes are and structuring these so that we can actually use them in real estate, but we need to make sure that we're staying within the limits, and that we have the available cash as well as the long-term growth. So a lot of what David and I do is we talk to people and say, hey, it's going to vary. We have some people that are putting $10,000 a year into this. We have some people who are putting $300,000 a year into this. So the max is completely up to you. We're just going to work with you on, what is your personal goal, and we're going to tailor it specific to you based on the IRS code.
Yeah, that was a question I was wondering too. Like, is there a cap on that at all?
It all depends on the person and how much they want to save. So technically no, but the way that we structure these is we have a minimum and a maximum corridor. So you have, whatever it is that you want to save, whatever the max is. And again, that kind of comes down to each individual person. Like, how much am I wanting to save every single year? And then in a good year, what would be the most amount that I can save? So there's not really a cap, but there is a corridor that we really function within, because again, we start at, hey, where do we want to be sure that we save every single year? Like, even in a worst case 2020 COVID scenario, right? We want to make sure that we save X amount. Okay, great. And then at the end of the day, if we really kind of boil it down to brass tacks, each person is going to be a little bit different than the next. They're going to vary just a little bit, because we are still using a life insurance chassis, right? So we're considering age, health, right? Females, we tend to get better ratings than men do. But here's the good thing. I will say a lot of people that we talk to who are older, and they think, oh, well, because I'm older, this isn't going to work for me. It actually works a lot better for older people.
Oh, that's good to know.
Yeah, it's almost backwards. When you're young and healthy, your cash is going to grow fast on its own just because you're young and healthy. So the amount of cash that you can put into it is limited because the IRS code is basically there's an algorithm between cash and how much you're saving, right? So I'm not going to get into the chaos of it. But when you're young and healthy, your cash is already growing faster than it would if you were older and less healthy. So if you're older and less healthy, what that means is your corridor is wider, meaning you can dump more cash in than somebody else who's doing, at 25 or whatever. So I say that because a lot of people are like, oh, I'm too old or I'm not really healthy. And I'm like, it actually works out better sometimes, which is odd. But
because I just got a new, I had to get a new life insurance policy not too long ago. And so went through the whole thing or whatever. And
yeah,
it's like, well, the term is better, when you're a certain age, I guess. And then the whole life is like really good to start apparently when you're younger, maybe. So that's interesting to hear that other perspective, I guess, but I guess it's the strategy, right? It's like what you're using it for.
You're exactly right. So I use a lot of analogies if you can't tell. When we're talking about infinite banking, the infinite banking concept, infinite banking strategy, that's exactly what it is. It's a strategy. Too often people are like, oh, life insurance, ooh, why? I'm like, okay, does it matter? I mean, you can call it whatever you want, call it the vault, right? That's what Warren Buffett calls it. He calls it the vault because think of like a safe in your basement or garage or whatever. You can put money in when you want, you can take money out when you want, it's protected, it's safe, and who knows how much cash you have hiding in your vault.
Yeah, I
just
like
you.
That. Yeah.
IRS doesn't know. FAFSA, so I have 2 young girls, whenever they go to fill out, if they decide to go to college, if they fill out anything application-wise, I don't have to disclose any money that's in my IBC policy.
Nice. Wish I'd have known that a few years ago. I've already.
I know. I've heard that way too often.
3 kids in college, man.
Yep. Oh my gosh, bless your heart. And same thing too, like for real estate investors and business owners, really, I mean, God forbid, knock on wood, we don't want this to happen, but we're in a sue happy world. Yep. So especially here in Texas, because your policy is 100% protected, even if you get sued, they cannot touch the money that's in there. IRS, they can put liens on bank accounts, on assets, but they can't touch your IBC policy. Wow. It's completely private. Now flip to the other side, right? I went to an underwriting workshop a couple weeks ago with Mark Kinney and the Think Multifamily Group. They did an underwriting workshop and they actually listed out and they had some vendor stuff and different people there at their event. And we've actually talked to multiple lenders who do not recognize 401ks or IRAs as liquidity anymore. They give you 0% account value towards your net worth or your liquidity.
Wow. Why is
now, because one, it's difficult. They're not liquid, right? You have to pay 25% in taxes and a 10% penalty. And even after that, whatever money you have in there is susceptible to the volatility of whatever you're invested in.
True. Yeah, I can see that.
So even if I've seen some lenders will give credit for it, but they're only going to give you 50% of the account value.
Wow. That is really interesting.
But the IBC policy, again, it's liquid and it's guaranteed and all of those things. So whatever your cash value is, lenders, you can actually list it as 100% liquidity or net worth towards your cash on your PFS, your personal financial statement.
Wow.
Because it's immediately accessible.
Like, we're going to have to talk after this.
It's a beautiful thing. So, and that's the thing, like, if we look at it as a strategy, like, what are we trying to accomplish? Like, does it really matter what it's called?
Yeah. And it's asset protection, which when you're in this industry, you really need. Like, everything you can do to protect your assets. You work so hard to build this stuff up. We're trying to create, legacy and stuff like that. And so this sounds like a really great.
It's awesome and great.
It's great and it's great to protect all this hard work that you're doing, for later generations, for your family.
It doesn't matter how much money you make, it matters how much money you keep. And that's not just for your lifetime, it's for the, lifetime moving forward. So again, with another analogy, like I always tell people all the time, I'm like, yeah, I use a lot of analogies, but Jesus did too. So he must have been onto something. But when we talk about, our full overall financial plan, a lot of people are only focused on offense. They want to put points on the board. And that's great. We want you to go out there, put points on the board, go invest, go get the best rate of return that you can. Have at it. However, it does not matter how many points you have on the board. Again, I'm from Dallas. I love the Cowboys, but if you don't have a good defense, it doesn't matter how many points offense puts on the board, right?
Yeah.
So what we're saying is we are here to step in and create this, again, warehouse of wealth. Go out there and make as much money as you can, but put in these assets, like you said, asset protection, so that you can keep more of what it is that you've built up. And that's what these are designed to do. It's not going to be your rate of return. I've never told anybody, hey, don't put your money in your business or real estate. No, come over here and put it in this IBC policy. No, I tell people put money into an IBC policy so you can invest in real estate. It's a yes and, it's not an either or.
Right. And it's just another bucket too, right? Like when you're looking at like thinking about profit, like a lot of people implement profit first, right? And it's like putting, your money in all these buckets. And I view that almost as like another bucket. Like you flip a house, right? You make 30,000, take part of that and put it in something like this to protect it and keep it there and grow that, right? Instead of just having it go back into your bank account and you end up wasting it on whatever.
Put it into your IBC policy. And now you, like you said, you've got, 30,000 or whatever in there. And that doesn't mean that you can't go use it again, right? Except this time you're going to borrow 30,000 to go invest in a flip. But while you're flipping it, you're still earning interest on the full $30,000 account value at the same time.
Right. And you're borrowing from yourself. So there's a lot less hoops to jump through, I'm sure.
So that's actually a really good point, because COVID and all of 2020 brought up some really ugly stuff between lender and borrower relationships. My partner, David, and I know a couple of people, one guy in particular, great guy. He owns like 120 units outright by himself, right? He's doing all these great things. He had over $1 million in equity in his primary residence. Well, he had an opportunity come up and he wanted to take out a HELOC of probably about 750,000 or so from his primary residence. And the bank told him no. They said, no, we're not doing any HELOCs right now. We're not doing anything because of COVID. They were uncertain with everything. They wouldn't let him have access to, people talk about, oh, my home is my greatest asset. How is it an asset if you can't even touch your money without asking somebody else permission?
Yeah.
That's not yours. So it is what it is. I've actually talked to quite a few people who really disagree with Robert Kiyosaki on that, but that's neither here nor there. The point is, whenever you're borrowing against your cash value, you're the banker and the borrower. So whatever money is in there is yours. The only questions they're going to ask is, how much do you want and where do you want it sent? And you have the ability to pay it back at your discretion. So here's an example of this. This happened to me. I was doing some single family development last year. We started the property in January of 2020. It was supposed to take about 7 months or so. The plan was have it up and ready for sale before school starts and people can come and move in. Great. Well, that didn't happen. Right. COVID swoops in and it was just a mess. It was crazy. So anyway, we ended up getting it completed, but I did not sell this bad boy until month 13.
Oh, wow.
I planned on 6 to 7 months and it took double that. Not to mention lumber. We budgeted 26 and ended up paying 48,000.
It's so painful right now, right?
Yeah,
it's so
expensive. So I lived through that last year. However, whenever I had the money out, I used the money in my policy to pay down on the land and then fund the build and all of those things. Here's the thing. I did not have to make a single policy payment on my loan until I was ready.
Oh, that's nice.
So I get to decide at what rate I pay my loan back, right? And then I pay it back all at once. I can do it monthly, quarterly. I've seen people who take it out for a multifamily deal and they don't pay it back for 5 years until they do a refi or sell it or whatever. And they're like, okay, cool. I'm going to pay it back all at once. So are there ways to calculate which way is better? Sure. But at the end of the day, each person, you have the discretion to do whatever you want to do because you're the banker, you're making the rules.
Yeah. And so like for terms for that, are there set terms or I know that they can pay off when they want, but like, is there interest involved or is it interest free that they're paying back or?
Yeah. So there's an interest rate attached to it, kind of like a right? Like they're going to pay you 0.02%. So they're paying a little bit of interest to you so that they can turn around and take your money and give it to so-and-so at 4 or 5 or 6%. So you're doing the same thing within your own account. You're going to pay a little bit of interest to go out and earn more. But here's what we have to understand. If we look at amortization, right? So paying down a loan, or it's really not even amortization. These loans are done at simple annualized interest. So our loan is simple annualized loans, but the cash value is growing at a compounded interest rate.
Okay.
So you are earning significantly more than what you're paying.
Okay, that makes sense.
So you're creating an arbitrage there, right? And again, it kind of depends on the deal and all of those things. I would say one of the biggest value adds that my partner and I have is that we don't just know infinite banking. We don't just know real estate, right? We have experience. We're working in both of those areas. So we're not transactional. We're not just going to say, oh, here's your policy, move on. We've become friends with a lot of our clients. And a lot of times we have people come back months, years, whatever it may be. And they say, hey, I have a deal, and they want to look at it. And we have a deal analysis calculator. We can actually look and see and help them figure out, hey, it makes sense to do it this way. It makes sense to do it that way, whatever it may be. We just sit down and help them calculate and figure out and understand the mechanics of, hey, how is this specific deal going to work? So that's a really big part of our value add, is actually helping people implement this strategy, not just set it up, but implement it into your business or real estate portfolio.
Yeah. So are you, to that end, like, are you presenting opportunities to them? Like, are you, like, if you have a deal or if somebody you know has a deal, are you presenting opportunities to people to invest in that? Or is that a conflict of interest, or how does that?
Well, we have right now, so I don't have any deals active right now. That's kind of what we're working on in the Tampa and the Charlotte market. I've been in communication with a broker this morning, so hopefully we'll have one coming up. So that one's, stay tuned for that. But whenever we have our multifamily deals go active, we'll absolutely be able to offer those to our clients and say, hey, you have your infinite banking set up. Let's go ahead and, here's a deal that's available if this is something that you're interested in. Last year we did the single family development. We didn't have a whole lot of slots available for that, but we did a few over there. But a lot of our clients are GPs, right? So they have their own deals going on. With that being said, our promise to our GPs, that our clients, is they're, always going to come first. We will never, ever, ever have a GP that sends us one of their investors, and, let's say one of their investors sets up an infinite banking policy. The first thing we're going to do is help that investor put money into their infinite banking policy that they can put into that GP's deal.
Okay.
So when it comes to our clients, those are always going to be number one. Here's the thing: at the end of the day, there's plenty of deal flow out there, so we're not ever going to have to worry about being able to go out and offer that. Yes, that'll be something that we have available for our clients, but we also tell our GPs and those who are bringing people to us that we want to respect that relationship and say, hey, this is your investor, so we will direct them back to your deal. We have had people that come and say, hey, I'm looking for a deal. What have you got? Well, we don't have anything, but here's a network of people that we have that have deals in Airbnb, multifamily, RV parks, whatever it may be. So we really like the idea of being a central hub of, even if we don't have a deal available, we know somebody that does, and we can make those connections.
Yeah, that was a question I was going to ask you. So you can connect people with other people. I see a ton of value in that. Just even those relationships, being able to know like who's doing what and like who might be a good fit for a deal, and just being able to like really make those connections and get that money to work for people.
Absolutely. And that's a big part of getting to know people, like, hey, what are you trying to do? And which is going to drive how we set up the policy anyway, right? There's some people who say, hey, I don't want to see or touch this thing for like 10 or 15 years. I have some people say, hey, I need to like use this money in 2 weeks, right? So depending on where they are, we're going to set it up, but that's also going to help us get an idea of, hey, are you looking for B-class value add? Are you looking for distressed? Or, maybe there's a lot of people that are doing new development A-class, right? Whatever it is that you're looking for, we're going to get to know each individual person, because this is your specific tailored account, which is, again, this is why these are so specially designed, as opposed to, again, walking down to State Farm and just getting a policy, or going to uh, what is it? Lifeinsurance.com or whatever. This is totally different. And I think people know, if you've ever worn like a tailored suit or something that's made for you, oh, it's a game changer. It's so different than regular clothing. So these IBC policies, these fit very, very well for each individual person.
Yeah, this is really interesting. I feel like I'm going to have to dig into that a little bit more. Can you roll money? Like if you have an IRA or 401k or something, can that be rolled into something like this? Like, if somebody works a job or whatever, and they've got all this money sitting in their 401k, can they roll it into the IBC policy?
So 401ks are tricky because if you're still employed, it's going to be up to the employer whether or not that they will allow you to do what's called an in-service distribution. So if you're still active, that's going to be up to the 401k provider themselves and or your company. Now, if you have money that's accessible in an IRA or 401k, we don't have any rollover, and here's why. Infinite banking is done on a post-tax basis. This is like a Roth account on steroids.
Okay.
So all the money that goes into it has already been taxed. Is that a bad thing? No. We've seen people who say, hey, I'd rather pay 20% in taxes today because our tax is going to go down in the future. Probably not. And I darn sure don't want to be making less money in the future, right?
Yeah.
So a lot of times, and it's kind of a per person basis. Sometimes it makes sense to just say, hey, I'm going to pay the taxes and the 10% penalty, get that out of the way right now so I can put it to work where I want it. There's other people, sometimes it makes sense, sometimes it doesn't. So I guess to answer your question, no, we can't roll it over, but can you cash out of your 401k and IRA and move it into this? You can, we just need to make sure that it makes sense. And as long as, I will say, generally speaking, when we look at what real estate offers as far as returns are concerned and the post-tax, that Roth type savings, as far as what your taxes are going to look like in the future use of your dollars, a lot of times it makes, we can always sit down with people and do the math and see.
Yeah, that's really cool. Cause sometimes it makes sense just to take the hit now, right? So that you're not, in a bind later on. You're just, oh, there's so much, like I have to pay all this tax now. Why did I wait so long? My account got so big and now it's too, it's going to be really expensive to get rid of it.
It is. I've always kind of made a joke, like the kicking the can down the road, paying taxes. So it's like, okay, I'm going to pay taxes in 30 years. Well, tax brackets, they're not going down. I'm not going to make less money than I'm making right now. It's 30 years later. And my account has considerably grown in value, at least I hope so. So I'm literally setting myself up to pay so much more in taxes. There's actually quite a few videos and, informational pieces that actually talk about how the government makes more money off of those qualified accounts, like a 401k and things like that, more money off of those types of accounts than you do. But it makes a lot more sense for most, especially young people. It makes a lot more sense to do the post-tax Roth type savings.
Yeah, definitely. So if somebody wanted to set up one of these policies, what's the process for that?
Number one, call us.
Definitely.
So obviously I'm biased. David and I, we worked together for a while. And then of course, like I said, we've been in the real estate space, but we are authorized infinite banking practitioners. So whoever it is that you work with, if you're looking to do infinite banking, I do urge people to work with a certified or an authorized practitioner. You can go to infinitebanking.org, O-R-G, and you can actually, if you want to work with somebody local, you're more than welcome to do so. Obviously, we're on that website, but you can find an authorized practitioner based on your address or your state. So I say that because, again, this just makes sure that you're actually getting a true infinite banking policy from somebody who knows how to do them correctly. So that's step one. Number two, David and I specifically, we have a informational process that we walk people through. So we're going to, teach the foundation. How does it work? We're going to teach how it, how we design it. How do we structure it? But there is an underwriting process, right? So there's a questionnaire and an exam. It's really easy. It doesn't take very much time. But while we're waiting on the underwriting process, which can take anywhere between 3 to 6 weeks to actually get an approval from multiple companies, because again, we're independent, so we're going to shop it. And we're going to say, hey, who wants this business, and make them fight for it, right? So we kind of get that competitive edge. once you get an approval from an insurance company, we'll say, okay, it's kind of like getting approved for a house. You got approved for a $3 million house, but you don't have to buy a $3 million house, right? You can buy at whatever rate. So once we get your approval, that person gets to decide, hey, I want to do option A, B, C, whatever it may be. Because during that time period of underwriting, again, it takes 3 to 6 weeks. During that time period, what David and I are doing is we've met with that person once, maybe twice, and gone through an actual design and said, hey, this is what you said you wanted to save. This is how much cash you said you wanted, right? Whatever their specifics were, we come up with a rough draft plan for them. And we've actually shown them a couple of different designs. So by the time you get approved, people already know, hey, well, I know what this option looks like because I've already seen the numbers. Well, great. And then they can decide to do, again, A, B, C, whatever option is that they decide. Wow. And then you get it implemented. And I mean, literally, as soon as it's funded, we've had people fund it on a Monday and the cash goes in there on Tuesday. They turn around and use it again on Wednesday. So once it's going, it's a turn and burn kind of thing.
Yeah. It's like really quick turn, right?
Mm-hmm.
And I
can usually have money within my account. Like if I called it's 3:30, almost 3:30. So I could probably call and I would have the money from my policy to my bank account probably tomorrow.
I think that's important for people to hear too, just like the ease and the quick turnaround with that too. Like you could never go to a bank and get a loan in 24 hours.
No way. Yeah. No, they need like the eye of a bat and, your firstborn child or whatever else they're asking for nowadays.
Yeah,
it's insane.
It's so bad right now. It feels like it's just like everything. But if you can definitely like set something like this up and use it to, build your assets and build cash, I think it's a really smart strategy to implement for people for asset protection and just growth.
Absolutely. I mean, we tell people all the time, I know that infinite banking works for everyone. I know it does. However, I don't think everyone works for infinite banking. And I don't say that to tell, people don't do it. What I'm saying is it's not a get rich quick scheme. This is something that it's a disciplined savings. Hey, I want to save money. I want to use it, responsibly. I want to have like you said, I want to have asset protection. I want to create an overall strategy. Somebody who's just, saying, oh, I want to go out there and chase rate of return. And that's the only thing I care about. You're not going to be, you're not going to get what you want with an infinite banking. You can get a rate of return with your real estate or with your business. That's great. This is a place for you to warehouse your cash. Now, is there an acquisition cost? That's what I know people are going to ask that. How much does this cost? It depends on you, right? Like, yes, there's an acquisition cost. It's just like when we purchase real estate, we have to pay closing costs and all that. The way that we structure these, again, because we are overfunding them and we're doing as much cash as possible, we overcome the acquisition cost very, very quickly within the first couple of years. And I say that because what people want to know is, well, if I put money in, can I get it out? Yes. Once we overcome the acquisition cost, again, within the first couple of years, it's kind of like when you buy a house, right? Like, are you going to have 100% equity year one? No. Even in year two, are you? No. That doesn't mean that your house is a bad investment. It's just taking a little bit of time, right, to overcome the cost. The difference is it's not going to take 10 years to break even in this thing. Right. Like I said, we're doing this within just the first couple of years till it gets to a point where now I know if I put 30,000 into my policy, I can turn around and get 45 that same year. So it's just a matter of once you overcome that, then you have a cash in, cash out, and it grows. Like I said, it could be I put in 30 and I get 30. The next year I put in 30, get 40. Put in 30, get 50, right? So it becomes this exponential compound interest curve.
So it's just building on itself, right?
Mm-hmm. It's a beautiful thing. And not to mention tax-free. I just want to point that out again. If you can't tell, I'm a big advocate for that.
Tax-free. I have all these underlines and like, yes, that's so important. It's so important.
It really is. So,
well, this has been really educational for me, I know. And I think a lot of people are going to want to hear about this because it is such an under the radar kind of thing. So I appreciate you coming on and kind of sharing how it works and explaining it in a way too, that I think people can really understand. Cause I know like when I read your bio and stuff, I'm like, oh my God, this sounds really complicated. You explained it so well. Or like, if I can understand it, I feel like anybody can understand it. So
Oh, good.
that's
Yeah,
helpful.
it's been around for a while. I mean, my job is to make it as simple as possible. But it's a very powerful strategy when done correctly. Again, there's a lot of information and resources out there. So be careful, right? Like I found out that not everything on the internet is true. So
Surprise.
but I actually have I have various sources that are credible that actually go through different aspects of the infinite banking concept. So for people who want to read, I have ebooks. I have people who like videos. I have videos. So there's all sorts of information out there. Or if you just want to call and ask questions, I'm open to that. So whatever works for people.
Well, how can people find all this information?
Pretty much anywhere. So we are on every social media site. Yeah, every social media site. Infinity Investment Strategies. Right. So it's long, but it's all spelled correctly. Same thing. Our website is infinityinvestmentstrategies.com. And then of course my Google work number. So if you want to call me through that is 817-382-1509. And then, of course, I'm Erica Neal, my partner, David White. We're both on social media as well.
Okay, awesome. Well, we'll put that in the notes too, so that people can refer back to that and get in touch with you. And I know I want to get in touch with you too, and just kind of maybe do a little bit of planning on that also, because asset protection is so important when you're in real estate. I mean, I think it's important for everybody, but especially with real estate, just for a lot of the reasons you said, like the people being so happy, and you're trying to create generational wealth, and maybe you want to build trust and things for your kids. We want to leave something behind to show, to show for all of our hard work that we've done. And any way that you can protect that's smart, I think is just a good idea.
Oh yeah, it's really powerful. And I will say, so the last thing I'll mention on the trust thing, it's not just for individuals. Companies do this too. So if you look up BOLI, that stands for bank-owned, corporate-owned life insurances. There are businesses, banks, corporations, they actually buy life insurance policies and put their cash in there as a business. So in fact, Bank of America has 53% of its cash inside of a BOLI policy. So if we look at what the most wealthy, prominent, and profitable people and or industries and companies are doing, well, it's funny to see what they tell you to do versus what they're actually doing. But they have a majority of their cash in there. JCPenney, Walt Disney, right? Like there's a lot of big banks and corporations out there that use these policies. Some of them don't even care about death benefit, right? Like that's not important to them. They care about all of the leverage and the asset protection piece of it.
Yeah, for sure. It's so smart. This is so interesting.
I'm glad you think so. I agree.
I know. And I'm normally not, like, that kind of stuff is just so, I feel like kind of goes over my head and I don't really understand it as well. But again, like this makes a lot of sense to me, and it seems very easy to understand and something that wouldn't be that difficult to implement for people, for anybody.
No, it's pretty simple. It's very, very simple.
Awesome. Well, thank you so much, Erica, for your time today and for sharing, all this great information. And we're going to put in the notes for people to be able to reach you. So hopefully some people get something out of that and want to reach out for some help from you.
Absolutely. Yeah.
All right. Well, thank you again.